Today, folks, the stock market is finally correcting, at least the speculative part of the stock market, as the Nasdaq slides amid worries of frothy valuations. And I highly doubt it has anything to do with frothy valuations, or you would have been selling weeks ago. But who is selling? Probably the people, the so-called diamond handlers of the speculative realm, as hedgies out there start locking in those gains to get it off the paper and into the physical realm of their hand, so they can show clients at the end of the year how spectacular they were to lock in some of those management fees, baby. But look at the tyranny going on today. I mean, if you're into crypto, guys, the volatility is nothing short of astonishing here, and especially if you're playing the crypto treasury plays, which I warned you just to be a little careful when markets are flying. Crypto treasuries, those stocks, their assets expand, but in the exact opposite, they can contract quite dramatically here. And again, this could open up nothing more than a buying opportunity for those that like the higher speculative plays. But if you're in the indexes, the S&P 500, do you really care? It's barely a blimp on the radar. But for someone that's got their eyes wide open, that are paying attention like me, I can't help myself. I'm buying some of my favorite stock, guys. As you know, I couldn't help it. I bought 3 more shares of Meta this morning. Now that Meta in my corporate account is back to my average buy price, which blows my mind after being up 25%. And look at Google in this account. My God, I sold some of my shares a little too early, but at least on these shares, I'm now up 60% on an S&P top 10 company, might I add, in a given year. Is insane to me, guys. But what I want to talk about is Michael Burry shorting the insanity behind Palantir and Nvidia, which, you want to talk about crazy. This is an interesting story. And I also want to talk about how I think we're kind of losing track of what foundational investing looks like, and why I'm severely eyeballing Berkshire Hathaway as an investment at this point. So if you're on a path to financial independence, folks, if you love talking about markets daily, consider hitting that subscribe button, because today is one of those days that I live for, and that's when opportunity opens up and you have time to go fishing with your favorite companies, right? But I want to talk about the insanity behind earnings, because Palantir is a stock I've gotten wrong over and over and over again, and it's a constant reminder I can't buy things I just don't understand, and I'll never understand Palantir because their earnings were astonishing. But even with those astonishing earnings, again, the stock trades at a wicked valuation, which is why the stock likely went down. And also, this headline might have been driving some of that negativity. But listen to Alex Karp, the CEO of Palantir, kind of combating some of this and actually answering directly to that comment.
Short is a very difficult place to be, because you can lose everything, right? You can drive these people into the ground.
Thank God.
Like that. Michael Burry put a really big bet on it. It's almost $1 billion. It's $912 million. That's a big step for him to put into that. When you say you redouble your efforts, what do you do? What do you go back in?
Well, first of all, he's actually putting a short on AI. So the way I read it was us and NVIDIA, and it's like
the biggest position is you, though. I'm just looking through all of his shorts.
Great. Okay. So, and then, by the way, with the shorts, it's very complex. It's not even clear that, honestly, I think what is going on here is market manipulation. We delivered the best results anyone's ever seen. It's not even clear he's not doing this to get out of his position. I mean, these people, they claim to be ethical, but, they're actually shorting one of the great businesses of the world. And I'm not against shorting as a matter of theory, but I'm just saying, pick something that is not doing a noble task, and, it's us against them, and that's a good position for us. I mean, look,
I just want to say, I always feel like Alex Karp is a bit of a virtue signaler, and I get it. He's got to talk as highly as humanly possible about his own company. But regardless of how you feel about Palantir, guys, you don't understand the future of these nuanced businesses. We don't know how big Palantir could potentially be. And I get it. It's revolutionizing corporate, government, so many things. And it's represented in the absolutely astonishing growth numbers. I mean, revenue was up 63% to $1.18 billion, guys. But that puts the company at what, 100 times? Right now, 100 times revenue sales. And, let's not even talk about the bottom line earnings here, guys. It's important to point out that people were doing a lot of comparables to the dot-com bubble, but I think Amazon at its peak in the dot-com bubble was trading at like 40 times sales or something like that. I can't tell you what this company looks like tomorrow, and I don't want to sit here for the next 3 to 5 years letting the valuation catch up to what I'm paying for it today, because I just don't know how big this business is going to be. But if you do, that's where the opportunity lies. But you see it on the earnings, right? This stock has gone so parabolic that even with astonishing, incredible earnings, the stock itself is differentiated from that underlying business and can drop precipitously, guys, which is why it's not like the biggest deal in the world to short it. But maybe he's right. Maybe there's market manipulation here. Michael Burry makes a few headlines, stock goes down, but again, it seemed to have dropped on earnings, perhaps more than these headlines, because the whole markets are dropping today regardless of how you feel, right?
When you're printing a rule of 114, again, people who aren't technical, I think roughly an incredible score, like an Olympic grade score on Rule of 14 is like 50. I mean, that's roughly, like, if you're between 50 and 7, you're an Olympic athlete, a unique implement athlete. This is like Michael Phelps-like score. like Michael Jordan. Like there are no scores like
That doesn't mean you can put an infinite, like just a never-ending valuation on your company, my man. I mean, that's just not how it works.
this. There and 121 growth off of almost a 1.5 run rate in U.S. commercial, and a 77% growth in the U.S. and an aggregate off of an aggregate base of $4.5 billion. By the way, I predicted we'd get here. So it's like if you want to short that, be my guest. You go ahead. We're just going to go do our things.
I don't have the cojones. The craziest thing anyone could ever do in the market is short a stock that's going that parabolic.
I mean, look,
I think, what was it? Martin Shkreli, the Pharma Bro guy, has been getting clobbered shorting the quantum plays. I wonder how they're doing now, though.
Tell you, there's a tale of two cities in our society. We need experts versus retail. And you see it like, I don't know why these newspapers are helping Mandani win. I don't know why we can't have honest discussions about our future. I don't know why we have to allow fentanyl attack.
All right. We don't need to do this whole political thing. Again, I feel like he's a major virtue signaler, and I get it helps his company a lot. To each their own here. Give me all the flack you want for that. I recognize Palantir is a foundational company, and NVIDIA, these are great companies for the AI future, but we don't know what those business models look like 5 years from now, guys. I'm not going to pay 5-year valuations for them. I'd rather just hold them through the S&P, let a market cap weighted ETF control the future. But when it comes to picking individual stocks, and what I truly understand is I don't need to pick 10 different companies, guys. I just don't understand 1020. I couldn't tell you Pepsi's supply chain model. I don't know where they're getting their products from and what countries and the reliability of soybeans. I don't know that. So why would I buy it? What I do like though, and what I have been following, is companies that I think are trading at substantial discounts, and I've managed to make some substantial gains again on companies like Google. But I've also recognized that the days of foundational investing, I think, are long behind us. I think we're in a new bull market, a new foundational technological revolution that is going to be very hard to understand from a foundational and like fundamental investor, which is why I think it's prevalent to own the indexes, to make sure you're getting that exposure regardless. You do not want to run away from this market that we're experiencing, because it's what has set my financial freedom into play, and I think we've still got a long runway ahead of us. But man, when I look at companies like Berkshire Hathaway, companies, these investors I grew up with that came from that fundamental way of investing, and when you look at the companies today, no one's talking about these stocks, guys. And I've been reading through the recent financial earnings of Berkshire, and again, you can't even compare these two stocks like Palantir and Berkshire, but you can't tell me that Berkshire's not an incredibly cheap, reasonably valued company today, guys. I mean, I couldn't get over the fact that they have $72 billion in cash, $305 billion in short-term investments in U.S. Treasury bills. That's $377 billion. That is over 1/3 of their current market cap is just sitting in cash and cash equivalents, guys, let alone the total assets that sit at $1.225 trillion against their current total liabilities right now that sit at $525 billion. I mean, this company is sitting on over $700 billion in underlying assets. Again, there's very few companies at this scale that sit at those kind of, valuation levels against their current market cap of $1 trillion, which is why I think just from a fundamental standpoint, and if you look at the earnings here, guys, again, it's a little bit choppy because you got to understand insurance companies, the way their revenue works and their net income models get a little bit choppy. But even still, if we just look at the trailing 9 months here, $97 billion in net earnings. Again, the company could probably be trading at, maybe if we're looking at the recent earnings, of 15 times price to earnings multiple. And again, the company is just incredible. I mean, I look at the revenues here, guys. Again, they're not growing at an extended clip, but for the 9-month ending, $277 billion in total revenues, guys. This company is like trading at like 3 times, less than 3 times sales. Like, are you kidding me? I mean, I don't know. I'm looking at Berkshire and saying, hey, if you're worried about the overvaluations in the market, this is an incredible place to park some capital as a hedge against a crash for, there's just no company on the planet that has more cash than Berkshire does right now. And I've been looking at earnings too in the midst of this earnings season. Again, you can't tell me that. Sure, Palantir, you're looking at some speculative markets like crypto, but across the board, earnings have been nothing short of astonishing. The market's expensive, sure, but it's justifyingly expensive. When you even look at Shopify, right? Like, Shopify's not a cheap company either, but their revenues are insane. I mean, they went from 2.1 billion to 2.8. like I told you guys, there's nothing I like to see more in a market cycle than prices coming down and earnings going up. That is the dream market environment for people like me that are looking to hand select some of those individual plays out there. And I'll pass that question off to you. The only thing that I can ask you is, are you buying any of those plays? And if you want to have a one-on-one, guys, support the channel, go to KyleLivingston.com, link in the description below, because I do use my Shopify store. I am a Shopify supporter, just not a Shopify shareholder, but I'd love to know what you think and what you're buying in that comment section below.